and welcome to this week's look back at the major news stories from the last few days. I think it's fair to say there's one place to start, and that's with the sad passing of Queen Elizabeth II in the UK. And obviously lots of comparisons are being drawn with regards to the state of the UK economy, the British economy, now compared to when she first started, and in fact many decades of her reign. Now, Queen Elizabeth II died last Thursday, having reigned for 70 years, longest ever reigning monarch the UK has seen. When she came to the crown, when she was crowned, so Winston Churchill was the Prime Minister, and in fact roughly £1 was worth $2.8. Very different now, of course. We're looking at cable 114, or the highest areas of 114 to the 115 mark. Fair to say Britain is certainly in mourning for the monarch, but also potentially for the economy. The Guardian, a mainstream newspaper in the UK, noted that the UK is currently the Europeans' middle peasant, probably a title that we haven't seen for a very, very long time. Inflation is the highest of all the G10 countries. We're staring down the barrel of an energy crisis, potential impacts of coronavirus this winter again. It's fair to say the forecasts are quite dreary, probably as dreary as the mood of the majority of the inhabitants of the UK currently. And in fact, the Guardian even mentioned, will the UK government turn to the IMF later this year? If you look at cable, the long-term chart shows cable is moving in a downward trend quite clearly. In fact, technical analysis suggests the channel could be supported by the lower line, but if that happens, it may be nothing more than a rebound. Take into account, with the Queen's funeral on Monday, UK markets will be closed, certainly the FTSE and the main stock markets. So do take that into account with your trading. Okay, next we're going to hop across the pond, as we like to say, and look at the US. Now, the SEC has created a division to deal exclusively with crypto. The US Securities and Exchange Commission is creating a crypto assets authority. Now, the SEC chairman, Gary Gensler, said, "I believe of the nearly 10,000 tokens in the crypto market, the vast majority are securities. The offerings and sales of these thousands of tokens are subject to securities laws." This is quite a big statement and potentially quite a big move forward for the crypto market. Brings some clarity to the regulation that surrounds it. In fact, potentially brings some regulation in certain areas where there is none. Would it lead to mainstream acceptance? Would it end the anonymity of which has been so attractive to many people that have got involved in the crypto markets? Nobody's quite sure at the moment. But Bitcoin's currently trying to gain a foothold above the resistance, which originates from the August 24th to 26th highs, and also coincides with a 50% level of the AB decline. Now, it's fair to say I think the crypto market is calling out for some sort of regulation. It makes it very difficult for retail clients, particularly, for example, in the UK, to be able to access trading on them. So a lot of the market seems to think that this level of intervention, but of interest and regulation could be a good thing moving forwards. But it's still to be seen if those early adopters feel the same way. It's certainly an area to keep your eye on, crypto markets, over the coming months, with more and more central banks and governments getting involved. Our first story, we're going to stay in the US. And the US economy has been doing pretty well. But what about the S&P? Now, obviously, the whole globe is seeing inflationary pressures at the moment. But despite this, US dollar has been doing particularly well. And in fact, if we compare it to, say, the Great British Pound, as we've looked at in previous weeks, we're talking about a 20-year plus low for the Great British Pound. But the stock market seems to be where the moot point is. Conversely, in the UK, while sterling is taking a bit of a hammering, the FTSE 100 is doing pretty well. Can the same be said of the US? Well, some economists are saying the S&P could decline by 26% over the next year. Put that in perspective, that's 4,000 points down to 3,000 points. That's a really significant move. British veteran investor Jeremy Grantham, who in fact has an investment fund in the US, stated the above and said that, he's a man who's studied equities and tech stocks for many years, avoiding the Japanese asset price bubble and then the whole internet bubble, staying well out of the way. Now he expects tech stocks to tumble and he expects corporate defaults to soar. He's considering a position against what he is calling junk bonds in terms of S&P and the tech-heavy Nasdaq. It's a pretty scary prediction, but don't forget, it is only a prediction, and one person doesn't get it right all the time, as I'm sure we've all seen in our trading. But certainly it's important to take these sort of opinions on board. It could, and I reiterate, could be a very bumpy ride for the S&P 500 over the coming months. Okay, finally this week, we're going to have a look at Japan. And what we've seen with figures coming out this week is Japan faces its record balance of payments deficit. In August, the balance deficit amounted to just over an unprecedented 2.8 trillion yen. That's a very, very big figure. But why? Well, firstly, like an awful lot of economies around the world, we're dealing with a rising cost of energy imports, which is particularly hurting Japan. And secondly, we're seeing a weakening yen. In fact, it's down 20% versus the US dollar this year. That's a 24-year low. Fair to say, performing almost as badly as sterling is against the dollar. Now, it may weaken further as US Fed tough actions aimed at fighting inflation continue. We're expecting further interest rate rises, which could have a negative impact on the yen. But there's a flip side of the situation. On the other hand, the Bank of Japan has already stated, along with several economic ministers, that it's ready to intervene to prevent these sharp falls in the yen. So be prepared for bursts of volatility over the coming weeks and months for the Japanese yen. And some analysts question how long the impact of any intervention would last. Would we see a day? Would we see a week of positivity for the yen off the back of an intervention? Nobody's quite sure. But as I say, volatility is sure to abound. We wish you luck in your trading in the week ahead.